Hello, everybody. We're just waiting for a couple of minutes until 7:05 to start our webinar to give everyone a chance to join if they are a little bit late.
I think actually I might just use these 2 minutes to go grab some water.
Yeah, please.
Broken voice. 1 second.
Yeah.
Okay.
Okay, I think we can just go ahead and start. So good evening, everybody. We have today here Doug Ramshaw from Minera Alamos. We're very excited to have him here and have him talk about their new projects. I won't be taking up much of the time since we don't have much time anyway, so I will just hand it over to Doug. Go ahead, please.
Thank you, Dara, and thank you everyone for joining us tonight over there in Europe. I appreciate the time of day for you, so I'll try to keep things brief as I introduce Minera Alamos to you for the first time. The company, I will be making some forward-looking statements in this presentation, so basically, what is Minera, and what are we trying to do? Well, we're built by a team that has basically had operational success building mines. For the last 12 years, they've built 3 mines. For any of the people listening that remember Castle Gold, that was bought by Argonaut in 2010, my CEO Darren Kernigan and the team built Castle Gold up from scratch, from a 25,000 ounce gold producer up to, well, they were heading to 75,000 when Argonaut bought them for 130 million. And we're basically, in the story I will tell today, it's kind of a rebirth of Castle Gold. The team's in place, we're still operators in Mexico, and we have a series of assets and partnerships that will allow us to hopefully do that again. We're very much a mine builder, and with a nice balance of exploration alongside it. So the company was backed by Osisko Gold Royalties a couple of years ago to roll up production assets. They were looking for an operating team. Darren and our team, were selected for that. So Osisko owns 16% of us and supply royalty funds to actually build the mines so that we can limit dilution for our shareholders. Typically we're looking for assets which are 400,000 to 500,000 ounces to start, with lots of exploration upside. And that kind of takes me back to how Darren built Castle Gold. With an initial resource, it was 300,000 ounces. They grew that out of cash flow, not constantly going back to the markets to raise money. They built a small, modest 25,000 ounce a year producer. And as they expanded the resource through cash flow, they were able to scale up production to 50,000 ounces. And we're heading to 75 when Argonaut bought them. Argonaut paid 130 million because at the time, the resource had grown from 300,000 ounces to 1.2 million. And so that's our goal. We're going to start with 300,000, 400,000, 500,000 ounce deposits, which kind of get orphaned out there. Juniors have them. They don't really know what to do with them. And there's diminishing returns for them to continue to try to explore and make them larger. Our team can actually take a 300,000, 400,000, 500,000 ounce deposit, and especially in our main focus, which is heap leach gold, and start up a mine. And then, as I say, expand everything through cash flow generated from that. So I'm going to tell you a little bit about how that model works for us and has worked so successfully. We have 3 assets right now, 2 100% owned. The third is an option we're earning in on from Vista Gold. But the 2 we own 100%. One is permitted, our La Fortuna project in Durango. The second project, we're expecting permits in the next couple of weeks on. Ironically, the second one we'll get permits on is the first one we intend to build. Our focus is in Mexico. We're very comfortable operating in Mexico. Darren and his team, have been together down there for 12 years. Really, with the exception of Darren, myself, and my CFO, our whole team is Mexican. It's a core competency of the group, and we're very comfortable in the parts of Mexico we're operating, which primarily Sonora and Durango. As I mentioned earlier, Cisco have backed us to build this, and we couldn't be happier with the partnership we have with Cisco Gold Royalties. So that really kind of speaks again to what I just mentioned, plus or minus 500,000 ounce deposits, rapid move to production. The permitting process in Mexico is actually incredibly transparent, and you're looking anywhere between 9 to 12 months typically for a permitting process to go through. So this is conceptually how we will build out the company. And again, we start the first operation with royalty funding to build a low capex operation. Cash flow from that will be used to expand the resource and the production profile, as well as help fund the second asset. And as we bring on the second asset, and we can bring on the third asset, ultimately with the streams of positive cash flow that we're looking at, we think we can then go out and start looking at the larger assets. And our goal is over the next 3 years to build out 150,000 ounce of gold production. And as I take you into the projects, I will talk a little bit more about how we can get there. Again, we're not in southern Mexico. We're in areas that we've worked in before. There are certainly better parts of Mexico to operate in, and we feel like we are, especially with Sonora and Durango, where our primary operations are. That's just a little scope. I can go into the individual projects after, but it seems like an aggressive path, but again, I think we are, one of our core competencies here is we are a mine building team. For me, it's been an absolute pleasure working with guys. I actually want to build a real business, and that's what we're intent on doing. And the reality is, if we can build this thing to the 150,000 ounce a year producer that our current assets would allow us to do, we obviously get into the ranks of some significant companies there. And this is a key year for us as we transition from a developer into a producer by year end. Now obviously, this is a slide from our partners at Cisco. We are one of their accelerator companies. And the whole point for a royalty company such as Cisco is the margins in the royalty business are not particularly large. What they like to do is be able to back with equity a company so that by advancing them the funds to help them get their assets into production, they get that extra torque on their investment through obviously upside on their equity investments. So as we're coming, this is a famous curve, the Lassonde curve that I'm sure we've all seen many a time. And obviously where Minera is and where Minera has been the last year or two, is just coming out of that orphan stage of development and into production. And what we really like with our kind of build of a mine a year for the next 3 years, not only do we get that first lift on the production ramp, but really there should be a second and third lift as we keep adding more production to our profile. So last year, Darren and I completed a merger of our two companies, and we embarked on what we felt was an aggressive but achievable three-year plan. I'm happy to say that everything we planned to do at the company level and at the project level last year, we were able to achieve. So as we entered 2019, our 3-year plan had turned into a 2-year plan, and this is an important year for us as we remind the market that Darren and his team are not new to building mines, and there's a new kid on the block looking to build out mines aggressively in Mexico over the next couple of years. So the first project is Santana, and the reason it will be the first, it's the lowest capex of our assets. It's about 50 kilometers southwest of Alamos Gold's Mulatos operations. Great access. We've completed a 50,000-ton bulk sample, and we can start showing on the next page. This was our bulk leach sample that we did. We're getting great recoveries in the oxide, roughly 80% at all manner of coarse crush sizes. And interestingly, even the sulfide at Santana, the sulfide part of the ore body leaches as well. The gold is free. We have no problems metallurgically speaking. And these are very simple operations for us to run. Really heap leach, mining doesn't really get much easier than heap leach. And certainly it's a core competency of our group, having built a number of these heap leach operations before. We've done all in-house production design schematics. When we merged our companies, we had an internal resource number in my company in the roughly 300,000 ounce range, so very similar to what Darren started Castle Gold with. And Darren rechecked those numbers, and then Osisko triple checked those numbers. So we will be funding the very modest capex to build this operation through royalty funding. This is only an 8 or 9 million Canadian capex. And part of the reason for that is we're not building refineries. We're building pads and ponds. We have a small in-house plant design. And we are not building refinery. We're shipping loaded carbon to Metals Research in Idaho. It's how they did it at Castle Gold. And it's how we were doing it during the bulk sample. And it's just cost effective. We are looking at cutting ways to cut costs and building these things out. We're not looking to cut corners. If you don't actually need to be pouring doré at site. So it means that the capex is incredibly modest at 8 to 9 million Canadian, which is exactly when they built Castle Gold, that first 25,000 ounce operation. And I'm glad I can point to it, was 6.4 million US. So we're going to do the exact same thing. We're going to use contract crushing, contract mining. There are a lot of local mine contractors. And this will be a very Mexican-run operation with our team providing the necessary oversight, and will allow us to generate significant positive cash flow very early on in the project's life. And again, so Nicho, which is the main zone, which hosts most of that 300 or so thousand ounces, and Nicho Norte, a portion of them too. We did the bulk sampling actually at the Nicho Norte zone. These are hydrothermal breccia that have come up from a large underlying pluton. There's very little strip. They form topographic highs. So really, when we're looking at the strip ratio on these projects, it's anywhere between 1 and 2 to 1. And really, all that comes in the form of internal waste rather than actually pushback of some pit. These were old models of our pipes that we now think are actually need to be corrected. These pipes are a little bit more subvertical to vertical, and we're actually excited in making that determination this year. Because it actually lends to a tremendous amount of new exploration potential we've opened up. And I will be happy to explain some of our findings that we've been getting just even in recent weeks. So as a little overview map, these pipes are 300 to 500 meters typically in diameter. There's at least 4 more pipes that we have to the south of these 2 main ones. One we actually press released, the Zata pipe that we need to drill, but they all host the same style mineralization. This one in particular, Nicho, was extremely well drilled by my predecessor company. It's drilled off on almost 25-meter centers, which is far more than you probably need for a heap leach operation that we're looking at. So it will actually help when it comes to the mine planning. We did drilling this year, demonstrating that it is open for expansion, and we're hitting from surface, the 80 meters of a gram. One hole that's not in this deck, but was probably our longest intersection that was in mineralization when we shut the hole down, was roughly 125 meters of 0.8 of a gram. Again, all this highly leachable and really twice the grade of the Great Basin. And one of the reasons we can build these very modular mines out, starting small and building out from that, we don't need to have the economies of scale of a big operation in the Great Basin of the States that might be 0.4 of a gram. So we've been extremely happy that the first drilling that's been done here in 7 years, as we started building out the mine plan, did demonstrate, as we expected, that there was a lot of mineralization that remained open. Now, of particular excitement, this was just a modest 10-hole program we did. Of particular excitement, we hit right at the end of that program the long sought for porphyry mineralization in the area. There was always this thought that, what is the plumbing system for all this? So the Divisadero zone actually laid 200 meters north of these pipes, and we were able to map a lot of porphyry material at surface and porphyry float before it went undercover. And the scale we're looking up there, just that we can observe at surface, is 300 meters by roughly 400 meters. But our first hole into it returned 95 meters of 0.33 copper, 0.85 gold, and about 1/3 of an ounce silver. And classic porphyry style alteration, veining, and now it's opened up this thought process that these breccia pipes to the south all could have that similar porphyry mineralization lying underneath it. And the nice thing about it is, everything's basically right at surface. We're not dealing with hundreds of meters of overburden. So we're going to be really excited to follow up not only the drilling at the Divisadero hole, where we kind of teased the market to some extent with drilling one and then never drilling a second hole in it. We mapped and see it's much more extensive. We were extremely excited to drill a deep hole there and see just what scale it's got. But we also now will want to drill some vertical holes right through the guts of the breccia pipes to the south, which we think will transition into that similar kind of underlying porphyry. And as we can see with that 0.85 gold, along with the 0.33 copper, it's a very nice gold-rich porphyry. So we're excited that despite the fact that we are focused on building mines and operating cash flow and expanding out, we want our shareholders to also have the excitement of exploration as well. Right now, I think we're pigeonholed a little as a developer. And so we didn't really get too much excitement for all these exploration results we were putting out at the end of last year, but the markets were a little tough during that period anyway. So certainly some very sophisticated people have been asking all the right questions about those drilling results, and we look forward to continuing our exploration success at Santana. And again, these are classic, holes through this deposit. Again, all considerably higher than what you would expect to see in the Great Basin, and it allows us to start small and just scale up. And we think, and it's tried and tested with Castle Gold, that was a very good way of protecting our shareholders as we expanded the company and operating cash flow on a kind of a scalable basis. The Fortuna project was actually a project that Darren owned before. In Castle Gold, when Argonaut bought them, they proceeded to go and buy Pediment Gold, also in Sonora. And so Fortuna, which had been sitting there, kind of lay fallow in the company, and Darren, a few years back, bought it back from Argonaut for $2 million. And a capped royalty of roughly $4 million. And it's a project we know intimately. The last time there was any exploration done at the project was Darren and his team. We know it well. We came out with a PEA in August of last year. And just before Christmas, we got the notice of permit approval. So whilst this permit's already in hand, this is the second project that we will be building. And one of the reasons is it's slightly higher capex. It's not heap leach. We based the original PEA off just a modest high-grade starter pit with a 5-year life. It's 3.5 to 4 grams per ton, about a 6-to-1 strip ratio, life of mine. But it's a milling operation, and we already own the 2,000 ton a day mill. Just to show some of Darren's operational ingenuity, he was aware of a company in Canada that owned this mill and had run into problems with the CRA here, our tax agency, and he called up and asked how much they owed the CRA and was told the number was $800,000. So he said, well, we'll give you the $800,000, solve that little problem for you, but we're taking the mill in return. So we got a 2,000 ton a day mill for $800,000, and that obviously has a tremendous impact on our capital requirements for this project, and I think again speaks to the ingenuity of my partner in that regard. So I'll just actually give you a little bit of an overview of the economics of this project. Roughly 50% of the gold is by gravity, with the remaining 50% basically will be floated in a low-grade copper con where effectively the values in the precious metal credits within it. So we're starting out with just a 5-year life, just like Santana. However, this project is no different. It has great exploration upside, but we will test all that out of the cash flow of this operation. So, it's a 1-year payback, and we're looking at life of mine average all-in sustaining costs of roughly $440 US. Now, for all our metal prices, we use $1,250, and the reality is we're higher than that now, and we think that we are coming into a gold market. Our belief is the best way to take advantage of a gold market. It's not trying to predict when it may or may not happen. Just build a business model that can fully take advantage of it when gold prices turn. So this is roughly 50,000 ounces a year. Santana will be built at roughly 25 to 30,000 ounces a year to start with. So by 2021, these 80,000 ounces of production, even at $1,250 gold, would be spitting out close to 40 million US in operating cash flow. And obviously, if the gold market that we all hope comes, it's going to be considerably more than that. Again, the resource we're talking about is right in the middle of that map. The property is expansive. There are numerous targets, both brownfields and greenfields there. And whilst we are building these mines out, we want to have that exploration going as well. So I would hope that everyone, including ourselves, enjoy the excitement of exploration results, because we certainly want to be delivering those two. Our third project is the Guadalupe de los Reyes project. This is an option to earn 100% from Vista Gold. They're fantastic ounces. Every project we look at, we like to have a drilling inventory of 20, 30, 40,000 meters of drilling on the resources. Again, a very large land package to go with it. Vista were looking at this project back at higher gold prices, where everyone was looking to build 1.5 gram, 2 gram milling operations. And when gold prices dropped off, they went over to Australia and focused on Mount Todd. Our team actually look at this and say, well, it's not going to be a milling operation. We're going to build a heap leach, just like Santana, $9–10 million build. We'll cut the cutoff grade on the current mineral resource, which is the Vista Gold resource. And so we're probably looking at a 1.2, 1.3 gram per ton heap leach. So these are fantastic ounces. It's an earn-in, and we haven't completed that yet. And to be perfectly honest, we're still working out whether we can get community agreements in place before we commit aggressively to pursuing the option. Our team have operated down there, have had those early discussions, and feel very confident we can operate at Guadalupe de los Reyes. So this is one that won't be a huge focus this year as we expand, as we develop both the Santana and Fortuna operations. But it is a pipeline project with fantastic ounces that we would like to continue to try to develop. One of the things Vista did was put a very fragmented land package back together. Historically, the Guadalupe mine zone on the eastern side of that map was one of the biggest mines in the area. Close to 500,000 ounces of gold, over 40 million ounces of silver produced from it. Very high grade underground. Now, all these other structures are more open pitable targets now. The chief resource, the roughly 500,000 ounces we have right now, is largely in the Zapote Lane zone to the left, to the west of that map. But all these targets are fascinating for us to look at the upside we could have to that 500,000 ounces. In terms of timing this year, touch wood, we have a gold market. I think we've all been waiting long enough for that to come round. Regardless, what we like about our assets is, if we don't find another ounce at them, we can make a whole ton of money off them. And the problem is then you've got to take that money, redeploy it somewhere else, permit again, construct. So we like projects that do have the upside in ounces, but we don't need another ounce to be highly profitable from our existing resource bases. So Santana, the permits are expected very soon, and we can make a construction decision very quickly. Our partners at Cisco have indicated the interest in working with us on royalty money to allow the very modest construction cost at Santana. So that's roughly a 6-month build. Our best guess right now, it's always tough when you're trying to provide guidance because everyone should want to know what to expect, but we try to be conservative in our timing. But our best guess is we would be loading the pads at Santana in Q4 this year, and actually producing gold off those pads Q1 of 2020. Whilst we are building Santana with the permits in hand for Fortuna, we will start site work there, so that as our teams complete construction at Santana, they can seamlessly transition over to building Fortuna. Fortuna will largely be funded by debt that we are more happy to take on once we know we're cash flowing at Santana. And likewise, we have a royalty arrangement with Osisko there. So Fortuna takes it's about a 12-month construction period. And so by Q4 2020, we'd expect that to basically be up and running. And so again, 1 year after Santana starts producing gold, the start of the Fortuna operation would then present us with closer to 80,000 ounces on an annualized run rate of production. We'll continue the work at Guadalupe de los Reyes this year to ensure that we can do what we want to there before we commit to the next option payment. There will be exploration. We will be doing follow-up at Santana, a phase 2 program later this quarter. Want to drill around that new porphyry discovery. That is one of the reasons my voice is a little hoarse today. That certainly sparked a lot of interest at the Cambridge show that we were at least from some very smart geos. So we're looking forward to drilling that again and showing more upside at Santana. And we haven't finished targeting assets which really sit in companies that don't know how to really advance them any further. So Osisko and us and the combined teams there are constantly evaluating other opportunities, and it wouldn't surprise me if we added another pipeline project to our portfolio as the year proceeds. It makes sense to do these things while gold prices are still relatively low. There's less competition, and the prices are very reasonable. Share structure, whilst probably not ideal if we were an explorer in the middle of Canada doing greenfields work, we're a future producer. So in many ways, we're a market cap story. In many ways, I like to focus on the fact that we've got roughly a 30 million Canadian market cap right now, and should be cash flow positive next year. And with combined operating cash flows from our first 2 mines, that even at $1,250 gold could net 40+ million US in operating cash flow. So whilst 300 seems like a large number, although I think the market in general is getting used to these, roughly 50% of those shares are owned by Osisko, management, institutions, and some private money. So, then the retail side, we have a lot of very large shareholders amongst that block. So it's a liquid stock. But the structure is, I think, more complicated by the warrants. And I want to be completely upfront here. We have 82 million warrants in the company. They all expire between March and July of this year, every single one of them. They range between 10 and 21 cents. So in many ways, I believe the 10-cent warrants that we have will almost inevitably mean that the 15 and the 21-cent warrants drop off our register. And I would be the happiest of everyone on this call if come July of this year, I never have to look at another warrant again. It's certainly our goal to try to not have a natural cap that they can do. But it also has allowed a lot of accumulation of stock at levels which I think are very advantageous. I myself have bought over 2 million shares in the last 7 months out of the market, and will continue to buy because I have such strong faith in Darren and his team and our partners at Osisko that this plan to build a real gold mining company is actually achievable on the timelines we set. And I think if we build it, our shareholders are going to be very happy to have come along on the ride with us. So the board of the company, Darren Kernaghan, as I say, he's just turned 50. Probably will hates when I say that, but he has just turned 50, yet he's already built 3 mines in his career. this is an art that is sadly dying out, it would seem, in our business, and it's one that can be incredibly rewarding for ourselves and our shareholders. My background, I'm a mining geologist from the Royal School of Mines in London. I was a mining analyst in Europe prior to moving to Canada 20 years ago. Chris, Federico, Miguel, they've all worked with Darren. Our VPX, Miguel, was the guy that basically increased Castle Gold's resource threefold. Not surprisingly, he's drilling at Santana, and we're hitting on every hole. Ruben Padilla is one of the senior in-house geological talents of Cisco, and he is their board representative. Chester Miller is the grandfather of heap leach. He basically came up with the concept. Clearly an exceptional resume for this 92-year-old Hall of Famer, having built or founded Alamos Gold, Glamis Gold, Pediment, and was working with Darren on Castle Gold as well. So, we have the right team, we have the right assets. I think we have the right mindset and business plan to execute on, to make this a very interesting next couple of years. And hopefully, if we have a gold market, to me, the best place to have your money is in someone who's actually making gold and doing it profitably. So with that little overview, and with my voice still standing, I appreciate the opportunity of just giving you an introduction to the company.
Thank you so much, Doug. I actually had lots of questions emailed to me, but I think that you went over most of them. Actually, I've been following, and I think we have most of them answered. But we have about 10 minutes left, so I will just go through the couple of ones that I think you didn't talk about yet. We have one question that says, are there any effects on the permitting processes for Santana and La Fortuna, considering there was a recent change in the government in Mexico for mining?
In short, no. There have been a lot of kind of knee-jerk reactionary headlines, certainly early ones in December on Bloomberg and the like, kind of a little panicked about the changing government. Yeah. We actually got our first permit just before the government changed, and the Mexican elections are every 6 years. We just happen to have them this year, otherwise I think we would have had Santana by year end. The only holdup was the transition team wanted to be able to sign off on the Santana one. We have full Sonoran government support. We have full community support. These are the kinds of operations which are actually AMLO would love for his people, because they're going to be pretty much 100% employing local people in agrarian communities. They are non-unionized operations, and there is the caveat to all this. I think a lot of the headlines dealing with Mexico right now and the changes are probably going to be more impactful on companies with big unionized workforces. And certainly the senator known as Napoleon, that is back from his exile in Canada, has probably got a bone to pick with the likes of Grupo Mexico from some rocky history they had there. But no, we're not seeing any issues ourselves. It's one of our skill sets is understanding how to work in Mexico, because our team is Mexican, and so yeah, no, we're I mean, you'd be silly to say that there are no risks in any aspect of mining, whether it's permitting or execution. But we feel like our team has already demonstrated that we can navigate the permitting waters in Mexico.
Okay, yeah, that sounds perfect. And I do know that it was a little bit of, as you also said, like knee-jerk reactions in December. So let's see how that's gonna go. I think you may have mentioned, yeah, you did mention that there are more projects on your radar in the area. Let's go with, do we see a capital increase or a need for a capital increase in the near future, and what would be the conditions for any financing deals that may raise?
It's a good question, and the reality is, I can, with hand on heart, say we can build something like Santana for 8 or 9 million Canadian, and I can demonstrate that we've done it for exactly that cost in the past, and nothing's really changed on our cost structure. It's one thing to be able to say that. It's another to be able to point to the funds and say, and not only can we do it, but we've got the financial resources to do it. So as the company sits right now, we have roughly $1 million in the treasury, and we will be securing royalty funding to largely take care of Santana. To take care of Santana, I should say. But the truth be told, we want to be advancing aspects of Fortuna at the same time, and they're going to require some capital. I don't think we want to rely on warrants, which are that there are definitely warrants that people close to us could cut checks and bring some money in that way. But I think we will be looking at some modest equity at some point this year. But we'll pick our moments and our timing on that. We have financial resources now to start proceeding with the Santana build, but we do aggressively want to move Fortuna forward in parallel with that. So we'll certainly hopefully pick timing to best serve our shareholders in that regard. But I think it's important I think our shareholders would welcome seeing the necessary financial runway to actually enact our business plan.
Okay. Thank you so much. I do have a couple more questions, but we only have 5 or 4 more minutes now left. So I will make sure, just to the attendees, I will make sure that your questions go to Doug, and we will answer them via email. But now I think if there is no more questions, which will be yes, okay, then I think we will need to now end it. Thank you so much, Doug. Even if you had a sore throat, you gave us so much information and you took your time. Thanks a lot. And thank you everybody for attending. And we will definitely be doing follow-up webinars, and we will be inviting you to all of them. Thank you so much. Good evening.
Thank you, Dara. Thank you, everyone.